Hi guys, welcome back. So, both the S&P 500 and Nasdaq had broken the all-time high already. What's gonna happen next? Nasdaq just made a new high today. It looks super strong. Russell 2000 had another backtest to 223 and bounced back off. Fear and greed level is at the range of greed at this point. So should we watch out for this? Especially now the tapering news is getting closer and closer. And all eyes on the meeting next week on November 3rd. And if US market does correction because of that, does that mean the Chinese stocks, the Hexa index, would have a much further dip? So many things are happening in a complicated environment, complicated time. So what would the smart money be doing? Where would they be moving into? What stocks should we be watching out for? Let's talk about this. I think many investors are very frustrated that the same sector, stocks in US and China, are making a world of difference. Lucid Motor by this time is growing 40% plus. Tesla has been breaking all-time high. Meanwhile, all the other Chinese ones like NIO, Xiaopeng, and Li Auto are still making flat movement. It has been outperforming the average Chinese stocks, but still, it's the EV sector, so I think people expect more from it. The best performing one is BYD as a leader of EV in China, but still today it had gapped down 7%. You know, all these few months I've been saying that EV sector and solar sectors are the two no-brainer sectors to just buy and hold. So let's also look at the solar sector. My holding in this is JKS, Jinko Solar. I think it has also been outperforming the Chinese stocks. This sector is still very strong, but in comparison with the US, like Enphase, which is quite close to all-time high, is still not as strong in comparison. So both EV and solar sectors are good examples of that. The companies in the same sectors between US and China are making such a big difference. Does that mean I would switch from the Chinese ones to US now? Well, for me, I wouldn't. In terms of the fundamental, China is putting much more effort into the new energy and EV industries. In terms of the government regulation policy, the infrastructure building and the planning ahead, and the market acceptance, I think China is more advanced. So that helps a lot the company's fundamental. So in terms of the share price movement difference, I think it's more the macro economy than the individual companies. And by macro, I mean the macro of the stock market performance. Because right now it's not like one or two companies that's underperforming. So I think it's more the macro environment than the fundamental, since the fundamental might be actually stronger. So we need to understand the macro environment of the two stock markets. So in this period, since the bottom in May for Nasdaq, even though Nasdaq had been growing quite strong, the whole time the fear and greed index were between fear and neutral. So that's why every time it dipped, I said that is not over because the institutions cannot exit while the market is in fear or neutral. It needs to be in greed level for them to plan on their exit strategy. Institutions have much larger funds and it doesn't take one day for them to sell. And the party usually ends in euphoria. And it wasn't a euphoria if the sentiment was moving constantly between fear and neutral. Because the whole time what's driving this run up was really just the mega stocks. But when you look at most of the growth stocks, the smaller to medium caps, some of them are making lower lows, some of them are moving flat. Because you can just look at Russell 2000. It has been moving flat for more than 1 year. So that's why I think the sentiment is not in greed level. Throughout these months, the market making all-time high. Recently, it's been going well, sometimes outperforming the main index, and wait until we make the all-time high, breaking the 233 level. I think many medium to small caps would rise, and then the sentiment would be more in greed or extreme greed level. Then that would be the moment we should be watching out for. In terms of the relationship between the US and Chinese stock market, we can look at history. In 2018, for the Hexa index, it had peaked in January 2018 and it had bottomed in October. So far, we have been sharing very similar movement between now and 2018. So after this, it had a very strong rebound of 11% in a matter of few weeks. So similar with what we are seeing right now. And after the strong rebound, it had made a pullback when the US market was making a correction. But it did not make a new low, but more of a backtest of support before another run up. So in comparison, Nasdaq did not peak in January 2018 but continue running up, making higher highs. And the correction did not start until the bottom of the Hexa index in October in 2018. So that was the big divergence. When the Hexa index was making a big correction, Nasdaq was running up, and vice versa. When Nasdaq peaked and started the correction, the Hexa index were making a reversal trend. So are we going to see the history repeat again? Would the Hexa index continue to run up here once the Nasdaq starts to have a medium-term correction? I think it's very possible, since right now the movement is almost identical as what happened in 2018. So does that mean we had just seen the top of this rebound and would continue to see it pulling back, and how deep would it be? I think there's a good chance we did see the top of the rebound when it was meeting the resistance of this overall downtrend. Similar with 2018, it got rejected by this overall trend and came back down from there, almost making a W-shaped bottom. It did not make lower lows and then make higher highs to confirm the reversal. That's why throughout last week I was mainly focusing on reminding the resistance around 263. A few days we were reaching the 262. And I gave two pullback level. First one 256 and second one 249. Now we are near the first target for pullback. So I don't know which level exactly it would get to, but if it does make a deeper pullback, I would think it's more of an opportunity than a risk. And if we compare again with 2018 for this backtest, it was a bit deep to make a W shape, a pullback of around 8%. So don't be surprised if it goes that deep. That's why I suggested to lock in some short-term profit if you had grabbed the dip a few weeks ago. Because if it keeps going up without any pullback, I would be worried for later, because it means the pullback would be much heavier and scarier. What's more healthy is that it goes up and then down and up and down a little bit and up more and down a little bit more, instead of a non-stop run up without any breath. That's not healthy. And meanwhile, see if some of the US mega cap can run into a euphoria state to attract more retail investors before getting into a longer term of correction or consolidation. Tesla has been running strong. Is it in euphoria yet? And I think maybe not quite yet. Right now, a lot of retail investors are still at the state of regretting not buying in or selling too early. So maybe given a few more green bars of 8 to 10%, growing up to 1300, maybe that would be a euphoria where a lot of retail investors FOMO in and it starts to have a medium-term correction. And I would say the leaders of the EV and solar sector growing strong, having a high valuation, it's good for the others because it set up a higher standard for the valuation of this industry, of this sector. So it suddenly makes the other ones look not so expensive, like NIO, Xiaopeng, and BYD, for example, which we thought were overvalued before. So that would be my projection of the two markets to see where the money is moving. Right now, it's near the end of 2021. I think a lot of investors and the bigger institutions need to move around. I think for almost every single investor on earth, for this year, there is a big divergence. There are some stocks that you might be making good profit, and there are other stocks that you might be making very big loss. So in this case, I think it's good to take profit and cut loss at the same time before the end of this year to offset the capital gain, mainly for tax purpose. So that means watch out for the mega caps that have been growing well, and also watch out for other stocks that have been dipping hard, which are the small to medium caps and some of the mega caps for Chinese, and especially the Chinese big techs, which were previously owned by a lot of large institutions and retail investors and have dipped a lot. So those might be the ones that they would sell out to cut loss to offset some of the profit from the other stocks. Something what I would be doing myself as well, to take profit from Like Luckin Coffee, for example. Like I said, I've been slowly taking profit from it, and my goal is to take out my original position, which is 20 to 25% of my shares right now, and let the profit run. I also took some profit from Ken, and some of the trades like Tiger I sold at market open on Tuesday, but I did not expect such a big gap down today. I was also planning on taking profit from Xiaopeng because it has met the current resistance at 48 and got rejected, and also JKS at resistance, but for both of them I want to see if they can pass the resistance first. For the losses, I have realized the losses for 40% of the share for NCTY, and instead I could buy back the other stocks in the same sector, like for example EBON. I think it's interesting to watch out for, so I can offset the profit with the losses to reduce the tax. Best, I think it's also okay to consider taking profit. Today it had dropped below the 10 MA, but it's not broken the uptrend yet unless it dropped below the 20 MA at 2 or the 250 MA at 1.85. And also hesitating if I should realize the loss for Z first and then buy it back later. Anyways, my point is to watch out for the volatility of these kind of stocks for people to take profit and take loss. So from now to the end of 2021, we still have around 2 months, and I think there it's a window open where the money would be parked into or moving into, and I think it would be the opportunity for some other stocks. And what kind of stocks? I think it should be somewhere that's less expected, because money usually goes to where it is the least expected. That's under the radar. Why? Because it would be less pressure to pull off, less people or less chips that are trapped inside. It has been well corrected throughout these moments of volatility. It could be somewhat more quiet, like it could be making some smaller movements throughout this time. If you find these kind of stocks, you can add it to your watch list, and it needs to be less retail investors' interest, so then less chips are trapped inside, obviously. And throughout the correction in October, it did not make lower low. So in my next video, I will share more stocks that could be like that potentially. I usually have a buy list set up in my app in case anyone reach my target price. And in the next video, I would also share my views on the LKCO movement lately and projection of the earning calls. Feel free to write a comment and share the stocks that you think would meet the requirements. Okay? Now, if you have enjoyed this video, please give me a big like and write me a great comment. And I'll see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.